Well, it's also my pleasure now to hand over to our last presenters for this afternoon. Lovely to introduce MK and Gina, two Equal One leaders from Western Australia. And MK and Gina will be giving us an overview of biblical principles of financial freedom, which is the whole focus of this webinar, and then how you can practice godly principles for financial freedom moving forward. So, MK and Gina, over to you, and away we go.
Thank you, Joe and Paul and Joe. Thank you for all the testimony. Indeed, God is faithful.
Amen.
Really faithful. If time's allowed, I can share a testimony later on, but if not, we just go to the materials that we have prepared. So myself, my name is MK. That's my lovely wife, Gina. We've been married for 35 years. We have 3 adult children now, and
2 are married.
2 are married. Yep. For me, I work. My daytime job is a financial controller for Norwegian's oil and gas company, and we are moving towards retirement now.
Yeah.
How about you?
And I've been in banking line for more than 30 years. So I guess when we talk about financial freedom, great testimony, but we can't complete that without talking a little bit about, the financial side of things, the financial institution, and that's where we're going to cover.
So, by the way, at home, in our house, the financial controller is my wife.
Yeah.
I told her that I only control millions of dollars. We don't have $1 million, so I leave the finances at home for her to
It's more money, it's more money.
That's just a joke. All right. Okay, we're going to share our PowerPoint with you now. We're going to touch on banking and financial freedom. This is an area that we have some experience or some knowledge. But whatever we share is just basically our experience, but
general information.
Yeah, so we advise you that if you're serious about it, go and look for a financial advisor or look for a tax accountant to give you proper advice that meet your needs. All right. Okay, what we're going to touch on today is the bigger principle of financial freedom.
You have already heard some of it from Mike and Alison, as well as Yin and Jane.
And the role of financial institutions. What are the common products and services that the bank provide? What are the factors affecting your loans, your ability to borrow? That'll be interesting. Some basic steps to increase your wealth, some practical tips, just tips, and how to avoid some pitfalls in debt traps. All right, so we are going to give a quick overview of the biblical principle of financial freedom. This is what some of these points have been touched earlier on. Number 1, God owns everything. We know that now. Number 2, avoid debts. Right, the Bible did not say that we can't borrow, but we should avoid debts because the borrower is become a slave. Right. So 3, save and plan wisely. This is what Ian has touched on. Budget. And then 4, give generously. Mike and Alison has touched a lot on that, including tithing and giving to others.
5, we need to work diligently. We know that lazy hands, will result in poverty. So 6 is seeking contentment. Let's focus on God, holiness, and lead a simple lifestyle. And 7, put your trust in God, not wealth. Remember, we can't serve 2 masters. And lastly, avoid greed, and also avoid overcommitment.
All right. In short, it means that biblical financial freedom isn't about wealth accumulations, but faithful stewardships, generosity, honesty, and integrity in financial dealings. That's very important. The way that we work, the way we use our money, we need to be honest. Don't do something hanky-panky and get caught by the law, especially, or caught by somebody. I mean, God knows, even though you may not, no one's know. And also, lastly, trusting God as the provider. So by seeking God's guidance in our finances and aligning with the scriptures, we are going to experience peace, purpose, and freedom from money anxiety. I just want to share something. I'm not sure whether you are aware, some of you. There's an article that we read yesterday. Let me see whether I can bring it over.
No,
all right. So in the news.com.au, that was an article yesterday. A Melbourne dad who is 36 years old dies by suicide amid cost of living stress. He actually committed suicide because he was under a lot of financial stress. And finally he took his life. He's just 36 years old, leaving behind a fiancée and a 15 months old baby.
Actually, it's very sad because there is a lot of help around. So, I mean, of course, our help is we got, but even if you look at financial institution, the bank can, help. There's always a hardship place, and if there's a help needed, always ask, and not keep to the.
So the point is, if we put our focus, everything into money, that's going to ruin us. But if you put God, then God is going to help us. So let God and not money rule your life. So having said that, now we look at what the role of the financial institution plays in seeking financial freedom. I'll leave this session to my wife.
So what is the role? Basically, financial institution plays a very vital role in the economy, as we all know. They help people, individuals like you and me, family, businesses, manage the finance and to access credit and invest for the future towards financial freedom. So the key thing here is really how to leverage their products and services to achieve our financial goal, rather than falling into the pitfall of debts and being a slave. That is what we need to avoid. So what are some of the common products and services that banks or financial institutions offer? Firstly, let's look at savings account. I mean, this will help us in our saving. We talk about budgeting, and when you budget, you want to put aside money where you can go to. You can go to the bank, savings account, or you want higher interest rate, you can do term deposit. Term deposit will be a little longer tenure. It may affect your liquidity, but be aware that this is available. Bonus interest, to encourage people to save. Banks normally give you a bonus interest if you do not withdraw. So basically, if you are disciplined, put aside money every month, you can see that you get bonus interest in the account. The other area is investment. So many forms of investment, but generally, you can do managed funds or you can do ETF, what we call exchange traded funds. Basically, they are managed funds that are traded in the exchange. Or you can go into stock and shares, and there are all kinds as well. So, depending on your risk appetite and whether you're young or you're old, whether you're old, you may want to go to some, more safer kind of stocks. And we are not here to advise what kind of stocks to purchase, but basically these are things that are available. The other area is superannuation. You can actually use that for investment as well. Insurance, maybe not so much of banking, but a lot of financial institution offers that. There are many forms of policy. Term deposit, policy is actually the basic because it is low in premium, and cash value, there's no cash value. It's basically to protect. And this comes in handy when you are young or start a family and don't have much to put aside, but you want to protect your family. You want to set aside some money for that. And for whole life, the premium is moderate, lower surrender value in the early years, but it can grow as the time goes. It gives you higher protection. Endowment policy is the one that will give you higher returns, but of course it requires higher premium as well. And this is mainly for savings and protection. And for us, we actually did invest endowment policy for our children when they were young. And actually, the maturity was like maybe about 4 or 5 years ago, I remember. And they actually got a pretty good sum of money. We invested and we actually gave it to them. And it came in very handy because they were all looking for buying property. It came in handy for them to put in down payment for their loans.
Yeah, in fact, insurance is also protection because in case of something happen, to you or your family have been taken care of.
Yeah, there are a lot of riders that you can buy, and if something happened to you, then the policy is still in place, and you do the children do not need to pay the premium.
Yeah, do not have to struggle with it. Yeah.
Okay, the other area is credit card. A lot of us, I would say, would have credit card. And there are many forms of credit card available. There are credit card that comes with no annual fee or low annual fee. And these are the ones that has got no reward or loyalty program. And those with a fee, there's also a wide range of kind of cards. And it comes with a reward program. And the reward program actually helps you because you can actually redeem the points, with shopping vouchers or travels, airline. For us, for me, I like to, do shopping voucher because it helps in the expenditure.
Please.
Yeah. Or, they can actually offer, a lot of banks offer 0% interest on balance transfer, and this is only for a period of time. Now, why do they do that? They want to encourage you to bring your money from elsewhere, the balance, so that you can start using the credit card. If you use it wisely, it is great for you. But we know of people who just transfer from one bank to another bank to another bank. And if you're not careful, it can snowball. And then in the end, you'll find that, you reach a point where you actually can't pay. And we do know of people who are in that situation. At the end of the day, it was really a bad financial crisis. And we really have to help them to look at not just from credit card, but they max out everything. And they also max out other loan, as well as in the mortgage space that they can't really repay. So this is where we really need wisdom from God. So loans, many forms of loan as well, overdraft, personal loan, and this may include car loan, as well as mortgage loan. We will look at mortgage loan a little bit more later by looking at what are the factors that the banks will look at when they assess your loan. The interest rate for overdraft, personal loan, these are usually higher compared to a mortgage loan. So when you are looking at that, do be wise as well, compare rates and see what different banks can offer. And financial planning, these are the advice that they can offer to help you meet financial goal, because every one of us got different goal and they can customize it. Example, they can look at salary sacrifice to reduce your tax and do consolidation of debts for you, and then that may bring down the interest rate. Okay, what are the factors that may impact the assessment of your loan? So some of you may be familiar, because if you have get a loan before, these are the things that banks are looking out for. So firstly, the credit score and credit history. Your repayment history is really important, because bank will look at, do you have a late payment habits? Do you have defaults or bankruptcy? Or do you have a lot of credit inquiry? This credit inquiry means that every time you go to the bank, you ask for credit, they will do a credit search. And when they do that inquiry, it is actually a place where all the banks can access, and they know how many inquiries you have done. So if you have the habit of going to bank A and then you go to bank B and bank C, by the time you reach bank C, your credit score would have gone down, because they will assume that because bank A has declined your loan and bank B has declined the loan, that's why you come to them. So be careful about making too many of such inquiry. If you don't really necessarily need them, don't just go around shopping. It's not like shopping for goods or shopping for clothes. So next one is on income and employment stability. So they will look at whether your income is regular or whether it is casual income. Look at your affordability, whether your employment is a long term, or are you on a maternity leave or other leave. All these are taken into consideration. Debt to income ratio is important, because if you earn 100%, how much are you using the 100% to pay your loan? Anything above 40% is a red flag, and you will probably not get an approval. And they will look at also existing debt. What are the other existing debt that you have? What are the financial commitment you have? What are your current loan, your mortgage loan, your car loan, personal loan, credit card, and your credit card limits. So this is also another area that I think I just want to share and highlight. Now, credit card limits, regardless of whether you are actually paying in full or whether you are even using the card, the bank will take that into consideration. So a lot of people don't understand that, especially I think in the Asian side, because a lot of banks offer free credit card. So whether you need it or you don't, they just apply, just in case. And a lot of them not just give you free credit card, it gives you freebies as well that comes with it. So they just accumulate a lot of credit card. And when you go to the bank and you just tell them, I got, this whole stretch of credit card, oh my, every of the credit limit will be taken into consideration. And that will eventually impact your borrowing capacity.
Yeah, I think they just assume that you max out the credit.
Yes, so the bank cannot, they will know whether you're paying in full or whether you are using the card. You can tell them they don't use the card, but they will know. So in the calculation, they will always take in the full limit, and that will impact. And it is also quite common that sometimes, when you apply for especially mortgage loan, they may approve subject to something. So they say subject to closing your this credit card or that credit card. That is the reason, because when you take out the credit limit, your borrowing capacity can go up.
Just for information, I do not have a credit card. I just write on her credit card. The only credit card I have is my company's credit card. That's for company expenses.
Yeah. He's always taking
a sub
card. Yeah. And for me, my credit card, I've never paid because I've worked in the bank for 30 over years. So all the cards are always free. I'm not too sure whether going forward it is because we are going to retire soon. Okay, savings and deposit amount. How much are you going to put in, especially for mortgage? They want to see whether you are coming upfront 10% or 20%. Some banks can even do up to 95%, so you need to come up with 5%. But then you have to come buy the what we call LMI or lender's mortgage insurance, and that's the one to protect, not protect you, but protect the bank. So in case for whatever reason you can't pay out, this will kick in. And this amount can be quite huge, it may not be small, like it can come to tens of thousands. But the good thing is you can always capitalize it and take it together with the mortgage, the amount, and then they will look at the monthly repayment together with the LMI amount. Okay, loan amount and loan purpose is important. Are you buying it for investment or are you buying it for owner occupied? And if it is personal loan, they want to know also what is the usage. What are you borrowing it for? Are you borrowing it to go for holiday? Are you going to borrow it just for gambling? And obviously, if it is gambling, it's a big no. Okay. Living expenses, so they will also look at the past 3 to 6 months bank statement just to see how do you live, what sort of expenses, because they are not just going to take your word, when you declare that I spent 2,000, but your credit statement is showing that more than 2,000, then you have to explain. Sometimes it's a one-off purchase, but if you look at 3 to 6 months, you can see the pattern. This is an area also where honesty is really important. Honesty, we talk about integrity, all these are important because if you go to a bank, they are very stringent. But sometimes, unfortunately, not all the time, when you go to a broker, because they want a business and they will help you to under-declare. So if you don't declare all your expenses, or you don't even declare your dependent, if sometimes you've got 5 children, they say just declare 3 or 2, and that will actually impact. But at the end of the day, you are responsible because if you can't service a loan, and then there'll be consequences.
Sorry, we hope there's no finance broker here. Pardon. I mean, when we knew of some broker which use those kind of tactics just to get the business, they just advise customer to change things.
And then, let's and also of course the age of the people is important. How long is the term loan, loan term? If it is very close to your retirement age, then they need to know the exit strategy. And a lot of time, you have people or customers saying that, oh, I will downsize. But downsize is not really a good reason, because if you have the habit of staying in that place and living that lifestyle, how do you then suddenly downsize? So, but if it is an investment property, it's understandable. You can always say you sell off your investment property, you pay off this and that. So all these are taken into consideration, especially also on your residency and citizen status. A lot of banks don't actually loan to people with a certain visa, like temporary visa. And even if they loan, if there'll be a stricter condition and also higher interest rate. And some people don't have credit history, so it's quite difficult for them to borrow, especially like say maybe in the case of credit card, you can actually put in the term deposit. Not all banks do that, but you can put a term deposit as a back to back. So then they can grant you a credit card of that limit.
As we said, every banks or every financial institution, they look at things differently. This is just some information, some of the points that when it comes to borrowing money or the bank might look at. So every bank varies differently. So just for information.
Just to share very quickly, for loan, at one time, because where we came from originally Singapore, and we actually have this what we call Central Provident Fund, which is very much like superannuation. The government in Singapore allow us to use that funds to buy property, and we have that funds to buy the property. But at that time, because I was working in a bank and the interest rate for staff was really low enough for me to actually arbitrage, because the funds in the Central Provident Fund is giving higher interest rate than the loan. So for me to take a loan, I'm actually earning rather than paying. So that was the time where we took the loan. So it's very unusual, but it does happen. So in short, really, scout around, look for opportunity, look at where you can actually take advantage of it, rather than for the bank to take advantage. Of course, every bank wants to make money, but the product and services are there for us to use. So use it wisely.
Hallelujah! God has given me a wise banker's wife.
Should I say amen?
Amen.
Okay.
Okay, basic step to increase your wealth. First, create or review your budget plan. I think that's have been touched on. You need to have budget. You cannot just go in and use all the money blindly without a plan. At the end, hey, where has all the money gone to? So, build a healthy savings. Look at your disposable income. How much you can regularly contribute to savings. Set up a direct debit if possible from your salary to go to a high interest saving account. You can find one, because if you're not going to do it, you're going to spend the money. Set some financial goals. Find the reason for saving. For holidays, for pay off your loans, or to buy a car, buy a house, buy rent, or for your children's education, or to start a family. Some of young couples want to start a family. You need to plan for that. Or for retirement, like people like us, we will need to save up for retirement. Or sometimes it's just basically you just want to reach some financial targets. For example, I want to be debt free by 50 years old or 45 years old, whatsoever. Set a financial goal and then track your spend. Understand where your money goes to. That's very important. A lot of some of us, when we at the end of the month, where has my money gone to? I don't even know. Use apps, use the tools that we mentioned earlier to help you to monitor.
Go to AC Money Smart. They have got a lot of tips there as well.
Yep.
Okay, so the other thing is to reduce your expenses and debt. We have said that quite a few times. So credit card and loans are great financial tool for us, like I said earlier. But don't be fooled into minimum repayment. A lot of times we thought, it's okay, the bank allow me to do minimum repayment. That will really result in excessive interest and very prolonged debt payment.
How many percent do you guys know in the credit card charge you?
It's easily like 20%
20%
per annum. So I've known of someone who actually was heading a credit card department many years ago, and she's a believer Christian. And she came to me, she said, Gina, I don't think I can do this job anymore because I feel that I'm a loan shark. So it's so true because, on one hand, because of the business requirement, you are hoping that you get rollers, meaning people don't pay. Because people like some of us who pay full every month, they don't really like this kind of customer because they're not earning as much from you. But people who don't pay, that's where they earn. But on the other hand, these people, because they are really in that stage where they can't afford, and then they have to roll over, they have to pay more.
Yeah.
It's really terrible feeling. And eventually she actually moved on to another role. She didn't want to do that business anymore.
So yeah, bank can help you, but bank can also, they need to make money too. That's the basic.
So even better if you can do all these things, pay off your credit card bills promptly, full each month. And then you examine whether this is really a need or a want. Don't do impulse saving like, you got a discount,
Purchase.
or you have got latest model, prestigious stuff, going on, and always look for alternative for that gives you value for money.
Avoid impulse buys, not saving. Impulse buys.
Yeah. So like, a lot of us, sometimes you go and buy and they say, discount. I remember, coming back and then telling him, hey, see, I saved so much money.
So much money.
Because, it's 50%, I saved, the 50%, but actually you're spending the 50% that you didn't realize.
It's really need the one, that's it.
Yeah. And worse still, sometimes we fall into that trap. We bought something, then we went to somewhere else and it's actually cheaper. Then we say, we should, buy more of this now. Dollar cost averaging.
No, sometimes we also try to convince ourselves a want become a need, right? I need this, but actually it's a want.
Yeah.
Right?
Okay, so now be critical on big spend. When you come to big spend, just check. Have you really thought about that? Is there an agreement between the husband and wife? And is this even budgeted or planned for? And do you have to borrow for that? And how about the maintenance cost, the running cost, like example car, maybe you think that in Australia, I can tell you the car is so cheap compared to Singapore. In Singapore, you got to buy a certificate of entitlement before you even buy a car. And that certificate will cost you more than 100 grand. Can you imagine? Yeah, so over here, if you think it's cheap, but then don't forget about the running cost, how about the petrol, how about the insurance? You need to cost them all this in. So have you done all the research and compare prices, compare mortgage costs, and you can refinance, if there's no penalty involved, especially if you're not on the fixed rate loan. So hunt out for sneaky spend, because a lot of times we sign up for this, sign up for that, and then we have direct debit, we forgot about them. Look at them and see, whether you still need them, you want to cancel them, and also don't overlook small savings, especially when the XR it can be quite significant. Actually, both of us just recently went to our health provider, private health provider. We have been too busy, haven't really bothered about that. And just before the April deadline came, I thought, we should go and look at it. And then we found out, oh, actually, I'm being covered for pregnancy, which I don't even need. So I said, take it off. And then we did a few review, the excess payment, like instead of 250, we increased to 500, and they gave us a bit of loyalty discount, because we have been with them for more than 10 years. And it resulted in 2,000 savings per year. So don't discount that sort of thing, yeah.
So we kind of have money to go for holidays now.
Why can't we go up 2,000? Okay.
No, save up. That's what we're going to teach people.
Okay, next.
All right, next. Keep working on your financial fitness and review periodically, because your circumstances may change, the economy may change, your job may change, things may change. You may have more babies now, more children now. So you need to keep reviewing and see, where are you? So I think someone mentioned, Mike mentioned about cash flow. You need to make sure that you have cash flow, you're liquid. There are a lot of companies out there, very good companies, they go bankrupt because they do not have cash flow. They are overcommitted in a lot of other things, but they lack cash flow. They can't even pay staff salary. So likewise for us, you need to make sure that you have some money saved that they put aside that allow you to have this liquidity. All right. Manage your debts, assess your risk because of changing circumstances or different stage of life, or even the market is changing now. You need to know what is exposure to risk, whether it fits into your financial plan, your retirement readiness, whether you have enough money, and another one is emergency fund. These funds are for emergency in case something happens. I have some money to handle it. And then lastly, we also recommend that you seek professional advice so that they can give you advice according to your circumstances, your needs, and your life pattern and things like that.
Okay, some practical tips. Firstly, so important, we need to pray and seek God's wisdom and guidance in our financial decision. And we have already covered about, doing a budget. So create a budget, make sure that it's sustainable, and then align it with your income and expenses. And review your spending. Yeah, make sure that you don't spend, like we have already said, all the impulse buy.
All right, savings or emergency fund. I think first of all, tie 10% to God first. I think this is just a general guide. I know that Ian has said something else, but it's really, the 10% is minimum.
And
right?
10% can be offering,
Yep. So the remaining 90%, spend half on your needs, things like the rental, your grocery, your bills and education and things like transport. Then the remaining 30% of 90% is 27% on your wants, your holiday dining out and entertainment, and the last one, the remaining put in savings and investment. It was recommended that you keep at least 6 months of your income as an emergency fund, because you do not know what can happen. So that in case there's something happen, unexpected happen, you have the money to deal with it. All right. Also, saving, if there's high interest saving account, put in there. If you can afford to keep the money for a while, put them into the term deposit, which earn better interest. We mentioned about automate the saving, go direct debit. That the first thing that got salary, go to savings. All right. The next tips is on tax efficiency. You should really ask your tax accountant on this thing. You can explore a legitimate way of reducing your tax liability, such as using salary sacrifice into a super and things like that, or some of the work-related or home office expenses you can claim from ATO. Your private health insurance offset, remember to get to claim it. Some of the expenses you can prepay before year end, and you can reduce your tax for the month. Capital gain tax discount, which government offer you, or you can talk to your accountant about that. If you have a lot of money, you want to set up some trust to reduce your tax. By all means, that can be done. Also, give generously. God say that give and you shall be given unto you. So whatever charitable organization that you want to give before year end, you should give financially and give it to them so that you can enjoy tax deduction as well. Of course, not every one of them were entitled to tax deduction, but if there are some where you can claim it. Smart investment. Always study research and risk and returns. Study data, trends, markets, and economy or whatever you want to invest in. For commonly, people invest in property, stocks, and share commodities, and it's important to diversify your portfolio as well. You don't want to put everything in a mining, and one day the mining slump, you got all hit by it. So you need to diversify your portfolio so that it can cushion the risk. And superannuation salary sacrifice, you can sacrifice, because salary sacrifice has a lower tax as well as saving towards your retirement. First homeowner grant, which government provide if you want to build a house at first time.
If you're
And
eligible.
also avoid speculative investment, because it is really some things that you are like gambling, like you have spent a lot of time monitoring that, and then you take away your time you got, and you create a lot of stress and things like that in your life. So you should seriously consider if you want to do speculative investment.
Yeah, seek wise counsel. Always consider consulting a financial advisor or tax professional, and avoid greed. That's so important. Celebrate God's provision and reflect on His blessing. Commit your financial plan to His care, and always have an attitude of gratitude. And plan for the future. Consider your long-term financial goal and make strategic investment.
Right. I think this is the last slide, right?
Yeah, we are going to wrap up.
Who's go first? You go first.
Yes. So let's look at how can we avoid the pitfalls of debt traps. Some of these we may have spoken before, but let's go through them quickly. So you need to understand your finance. We want to avoid overspending and having those unnecessary debt. Use credit wisely, pay off to avoid the high interest charges. Remember, don't roll over, and lower your credit limits if you don't really need it or you can't control it, you can't manage. So avoid impulse purchase. Always look at whether it's really a need or is it a want. And then limit your credit card application. If you don't need, then don't apply one. And we see lifestyle inflation. This is so common amongst people, because as the income increase, if somehow your expenses also increase, make sure that increase in the income can go towards your savings, investment, and debt reduction. And this is one thing that always, even from before, every time I get a bonus, I go straight into paying my mortgage loan. And that will help you, pay off your mortgage loan much
faster, and that means less interest paid. All right. Understand your interest rates and fees. Now, understand the terms that the bank give you or financial institution. Be aware of. Very often nobody read it. No, but you need to be aware of the interest rates, the fees they're going to charge, and penalties they're going to charge if you are late for payment or when you exceed the credit limits. Plan for major purchase, save up and don't rely on credits or pay now, buy now and pay later. That is a trap, right? Large down payments will reduce the loan amount and also associated costs. And lastly, that's very, very common now. Beware of scammers and all the get rich quick scheme. Avoid schemes. The bank is so busy today because of so many people being conned by all these scammers. Okay, well, I'll leave you with last few words is that always practice godly principle in your finances. Seek the giver and not the gift. In Matthew 6:24, it says you can't serve two masters. You can't serve God and serve money. You will despise one, right? So that is just a warning for all of us. All right, thank you for your time.